Hey everyone, it's Zach Beck. The IRS just announced its annual inflation adjustments for the tax year of 2021. These new tax brackets and schedules, as well as cost of living adjustments, apply when you file your taxes in the year 2022. Therefore, if you aren't anticipating any significant changes in your income, you can use these updated numbers to plan out your liability moving forward. However, if you anticipate either getting married, starting a new business, or having additional income during the course of 2021, you'll want to adjust your withholding and do everything you can to make sure that your tax liability is accurate moving forward. So what I want to do in this video is break down the details of what these new tax brackets are, how they impact you directly, and what you should be doing right now to make sure you're financially feasible moving forward. So let's jump into it right now. As previously mentioned, the IRS has announced its new tax rates for the tax year of 2021. Now I want to be very clear, these tax rates and these brackets do not apply when you're filing your taxes in 2021 for the tax year of 2020. These will apply when you file your taxes in the tax year 2022 for the taxes you are actually due for the year 2021. I know that might sound a bit confusing, but I really want to clearly state that this is for the tax year of 2021. And it as follows. There are 7 brackets as we had previously. They are 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Here's how those break down based off of your individual filing status. First, we'll start with individual taxpayers, and they are as follows. For individual taxpayers, if your taxable income is between $0 and $9,950, you will pay 10%. If you make between $9,951 and $40,000, you'll pay 12%. If you make above $40,000 all the way up to $86,000, you'll pay 22%. If you make between $86,000 and $164,000, you'll pay 24%. And if you make between $164,000 all the way up to $209,000, you'll pay 32%. If you make between $209,000 all the way up to $523,000, you'll pay 35% taxes. And if you make anything above $523,601, you will pay 37% in income taxes. So now that we understand what happens with an individual filer, I want to look at what happens with joint filers who are married, and let's see how those go as follows. For married individuals filing joint returns, if their taxable income is between $0 and $19,900, they will be taxed at 10%. If they make up to $81,000, then they'll pay 12%. If they make above $81,000 all the way up to $172,000, they will pay 22%. If they make between $172,000 all the way up to $329,000, they will pay 24%. If they make between $329,000 all the way up to $418,000, then they will pay 32%. And if they make between $418,000 all the way up to $628,000, they will pay 35%. And if they make above $628,301, they will pay 37% in income taxes. So these are the updated figures depending upon your filing status. Now there are other alternatives that we can look at, but I just wanted to dive into those details right now so you can plan accordingly depending upon what your status is. Now that we know what the tax rates will be for 2021, I also want to look at the standard deduction because that has been increased to $12,250 for individuals as well as for married couples filing separately. In addition, it has been increased to $18,800 for heads of household as well as $25,100 for married individuals filing jointly. So this is a significant change. It's going to increase that amount, and it's actually going to allow you to be able to have less of a tax liability moving forward. In addition, there will be no personal exemption amount for the tax year of 2021. This was part of the Tax Cuts and Jobs Act passed back in 2017, and so this now is continuing to remain at 0 for that particular status. For those of us who are investors, the capital gains rate will not change. However, what we're going to find is the brackets will change. Most of us will pay the standard 15% rate when it comes to capital gains taxes, but a 20% rate will apply if your ordinary income exceeds the 37% threshold. And also, you're going to find some differences for collectibles, art, and other investments as well. With that being said, here are the maximum capital gains rates. For married filing jointly, the maximum 0 rate amount is $80,800. For the maximum 15% rate amount, it's $501,600. For those who are filing separately, it's $40,400, and the maximum 15% rate is $250,800. And then for individuals who are just taxpayers themselves, it'll be $40,400 for the maximum 0 rate amount, and the maximum 15% rate amount is $445,850. So you can see that's the new how we're gonna have the brackets associated in 2021, so you'll want to plan accordingly as an investor. The IRS also released updates when it comes to deductions. Now I'll break those down in detail in the description of this video, so feel free to check that out, but it's going to be everything ranging from medical and dental expenses all the way down to your home mortgage interest and even your charitable donations. So feel free to take a look at that and understand that in greater detail prior to going forward and actually filing your 2021 taxes. But the main reason for any of us understanding this is that we do have to pay taxes here in the United States of America, but obviously you want to do everything you can to limit your liability so you have additional income to go and invest, that way you can achieve your financial goals. But I just wanted to provide these updates in detail so that way you could understand and plan accordingly and make sure you're withholding enough out of your paycheck right now so that way you're not having to get a big refund later on, so that way you have that additional revenue to be able to place into your Roth IRA or your 401k or other investments, or just being able to place into other streamlined areas that would actually make a more positive impact in your life than for it to be sitting with the government long term for them to then issue a refund. So with all of that being said, I hope this information was helpful for you. Feel free to continue to dive into the details. I'll put a few links in the description for you to check out, because you want to make sure that you're not just listening to myself because I'm just a guy on YouTube, but you also want to make sure you get the advice of a professional CPA or someone who really understands your individual tax filing situation, so that way you can make the most of this and make sure that you're paying your taxes properly, but make sure you're doing so in a manner that does benefit you personally. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, answer any questions on your behalf, as well as do any research for you. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create content that will make a positive impact in your life. And lastly, if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for taking time to watch the video today. I look forward to talking to you next time. Have a great day.